So today we're going to be talking about precious metals. We've talked about this before in the past, and with precious metals, it's funny because a lot of people don't understand precious metals. I didn't understand precious metals for a while, and it was original money. So it's crazy how it was original money, and then fiat money, aka like fake money, U.S. dollars, pesos, all this government made money, just came into the system, and then people forgot about like the real original money, silver. Back in the day, they would trade, or copper coins and gold coins. Anyhow, it's good to understand this. I think most people understand precious metals when it comes to jewelry. A lot of people own jewelry. Did anyone see the Millionaires Realtor Club that I posted the other day about the jewelry? Yeah. So I used to rock this 4-ounce chain, pure gold, and I had bought it for $5,700. So 4 ounces of gold, pure, for $5,700, which comes out to $1,425 an ounce.
How long ago?
And I bought that, I think in 2018, I think it was. So 8 years ago. And today it's worth $20,400, I believe, at $5,100 an ounce. So 4 ounces times 5,100, what gold was like a couple nights ago, that's 20,400 for the same piece of jewelry. And I bought that piece of jewelry because I wanted utility out of it. I wanted to wear it. I wanted to be able to wear it. But at the same time, I knew that, gold goes up. And I knew that it would have to be pure gold because, I'm like pricing it in ounces. So I think a lot of people kind of have that first initial investment, whether you know it or not, with gold or silver, when you buy that jewelry. I think what I learned through that lesson was people that own jewelry that's like 14 karat or 18 karat, then at that point, it's not worth as much, obviously, as if it's 24 karat pure gold. And then when you go and try to trade it in, there isn't like an actual spot price. Like there isn't like an agreed upon price that you could go into any place, jewelry store, and then they would just tell you, trade you dollars for that. Because if you're trading a 14 karat necklace into a store, a gold store or something, they're just going to be like, well, this is 14 karat. And then at that point, it's like discretionary. And then you could lose out on the value of the property, of the necklace, right? Whereas if it's a 24 karat chain, pure gold, all they have to do is just weigh it. They just weigh it and say, okay, this is 4 ounces. So 4 ounces times today's spot price of $5,100 an ounce of gold, then it's worth $20,400. And then they just trade it for you, right? And now I don't know if that piece of gold that I have, the necklace, and I have several necklaces, all 24 karat for that reason, and bracelets. But I don't know if I would get more if I try to sell it for not just the weight, but also for the, what is it called?
The melt value, or the just the jewelry value, like
the design value,
the brand, or
So I don't know, but that's not really like what I'm looking for. I'm looking to buy stuff like that so I could have utility, and then also so I could just cash out on it if I need to. Does that make sense? So anyways, that was my first introduction to like really understanding how it works. And I remember bringing it, I walked into John's shop. So John has been a contributor for a long time for us. He's done Millionaire Kids Clubs with me. We've gone to different high schools and educated kids about money and finances and things of that nature. And he owns several gold shops here in Arizona. He flew in for this today to help us out today. And I took it into his gold shop, and he was like, he tested it, and he says, yeah, this is what it's worth. It's worth 4 ounces of gold, and he broke it all down to me, and that's one thing that I really found helpful, and that's why we started working on with the kids, educating them, because every time I go into a gold shop, I would learn something new. I would learn about silver, I would learn about platinum, I would learn about gold, and then they really explain it to me. So anyhow, today he's back to talk about what's going on with gold, silver, precious metals markets, and then also maybe tied into the economy, and I'm sure he's gonna give us a history on money. Welcome.
Thanks.
Yep.
So, hello? All right, working, yeah? So, yeah, I've been here before, and so if I'm repeating some of the stuff that I've told you last time, I apologize, but I'll try and get through the history of money real quick, but I think it's important. Unfortunately, gold is probably double, unfortunately for anybody that wasn't here last time, gold is more than double what it was when I was here last. Silver, probably triple, or 4x where it was last time. There are a number of
numbers on those.
No, I don't remember exactly. I would guess silver was in the high 20s last time I was here. Now it's in the 80s.
An ounce.
An ounce, yeah, per ounce. And gold was probably at about 2,000. Now it's at over 5,000. Silver just hit an all-time high in January of, I believe it was $117 an ounce, which is, crazy from 20 some odd. But silver's extremely volatile metal. We'll kind of get into that. And Voltaire was talking about gold. It's not really what we do. I don't see, or jewelry. It's not really how, I'd recommend you invest in gold. It worked out for him. Most gold is 14 karat, and he's right. You go into a place, they have to refine it. They're probably not going to find another buyer that might have the same style as you. He, very unique, has 24 karat, which is rare, or even 22 karat. Most jewelry is not. Most stuff is 10 or 14 karat. But in any case, so my background is in commodities. I'm a licensed commodity trading advisor. I got into that business in 1999. At the time, gold wasn't doing anything. It was at about $260 an ounce. I wasn't really trading gold. We were trading soybeans, coffee, sugar, cocoa. The first time I ever bought gold was when the U.S. coal got bombed. And everybody said, oh, people are going to, we're going to war. Gold's going to go crazy. We bought options on gold. It didn't do anything. People lost money on that. Oh, well, make money, lose money. Commodities, very volatile business. Shortly after that, somebody had recommended a book to me called The Creature from Jekyll Island. And that book took me down a rabbit hole and kind of opened my eyes to the history of money. And the Federal Reserve's not federal. There's no reserve. It's the most blatant scam in history. And if people understood banking, I think Henry Ford said if people understood modern banking, there'd be a revolution before tomorrow. Basically, they print up money out of thin air and charge interest for the privilege. So before then, before 1913, when the Federal Reserve was created, and also the same year that the IRS and income tax, I think it was called something else than the IRS back then, but first year of income tax and Federal Reserve, 1913, our money changed. Still backed by gold. Our money used to be gold and silver. According to our Constitution, only gold and silver should be money, but we've obviously gotten away from that. It used to be that $20 was a $20 gold coin. And if you think about it, this coin is from 1874. At the time, it was $20. Then they would issue paper money, because this is kind of cumbersome. Paper is easier. You could fold it up. You don't want a bunch of coins jingling around your pocket. But you could exchange your $20 bill for a gold coin. That changed in 1933. They actually made it illegal to own gold in this country. You had to hand in all your gold coins, and they gave you paper for it. At that time, foreign governments could still exchange their US dollars for gold, but US citizens could not. It was illegal to own gold in this country up until 1974. And this has been money for thousands and thousands of years. Gold, silver, copper for smaller transactions were money. Up until 1964, silver was still in our coinage. And then from 65 to 69, they debased the coinage further, went from 90% silver, which this used to be 50 cents. And if you think about in terms of what gasoline costs. In 1964, I believe gasoline was like 25 cents a gallon. So gasoline is still, it's actually less than 25 cents a gallon if you're talking in terms of gold and silver, because this 50-cent coin from 1964 is now worth about $30 worth of silver. So, if you do the math and you look at real things, what you can buy with gold and silver versus what you could buy with the dollars, how they've debased the dollars, how it takes a lot more dollars to get an ounce of silver or an ounce of gold. That's really the story. It's just debasement of currency. The gold hasn't changed. The silver hasn't changed. You can just buy more or the same amount of stuff with an ounce of gold or an ounce of silver. So historically, gold and silver are money. They made it illegal to own gold in this country. You had to hand your gold in. They gave you paper for it. Bretton Woods Agreement, we remained the world's reserve currency because basically after the war we had a ton of gold, and the rest of the world we were very stable. We're the most prosperous, the greatest lender nation. Now we've become the greatest debtor nation. So the rest of the world would take our dollars, knowing that they could just cash them in for gold at any time. They trusted us. Yeah. In 1971, the rest of the world, Germany and France, realized that we're funding this Vietnam War, we're spending money on all these social welfare programs. They didn't think that we had enough gold to really back up the dollars that they were taking for our goods and services. So we were buying products there, we're using their service, we're giving them dollars. They didn't think they'd actually be able to get the gold. Charles de Gaulle sent a warship to pick up his gold in New York. Nixon got on TV, I think it was August 15th, 1971, and said they were temporarily stopping the convertibility of gold to stop currency speculators. And that's not what it was. It was that they would have wiped out our gold stocks. And no one actually knows, because Fort Knox hasn't been audited, I don't think, since like the 50s. And recently Elon and Trump were talking about auditing it, and that went quiet really fast. So who knows, what gold we have. But I do know that for thousands of years, it's been money. You can print dollars a lot easier than you could move tons of earth to get gold. The annual supply of gold, maybe 2 or 3% a year increase. So there's not much of it out there. There's scarcity. And the more dollars that they print, chasing the same amount of gold and silver, more or less, is going to drive up the price. In times of uncertainty, when people lose faith in governments and currency, when it looks like, maybe we're getting into another war that's going to last more than a few weeks, you might want to buy defense contractors. You might want to buy some energy stocks. But for insurance, people will buy gold and silver because they know that the government's going to print a bunch more money to fund these wars, and there's more dollars than chasing the same amount of gold and silver. So, I learned a bit about the history of money and started recommending to my clients to buy gold. And I started buying clients, like I said, the first time was when the U.S. coal got bombed, war, people, flight to quality, they get nervous, they buy gold as a safe haven or as insurance. It didn't work out the first time. Second time I read this book, or when I read this book, and the second time I recommended people buy gold.
What year was this?
This is in like early 2000s. Gold was at about 300, so it had moved from the first time I bought it from 260 to 300, and I bought customers $350 call options on gold. So we were betting that gold was going to go from 300 to 350 within a period of time, and I wouldn't recommend, that options as the vehicle to do that, but using leverage, they would have done very well if we were right. We were wrong, they all lost money. 2006, 2007, gold had finally moved to like 600, and I thought, yeah, finally, I'm gonna be right. But rather than buy options or futures, I started this business and started buying people the actual bars. So this at the time was, I think when I started buying silver, was $4.60. This bar would have been $460. Now this is like $8,500. Silver, very cumbersome. If you're gonna buy a bunch of it as an investment, a little difficult to store. So we set up vault accounts, and you can store at Brinks, or we have a vault in Poway where it's insured. If you're gonna buy a bunch of silver, gold, a lot easier. This is over $5,000 worth of gold, fit right in your pocket. bar of gold the size of your cell phone or less, over 100 grand, easy to carry around, transfer. I have it, I give it to you, now it's yours. Nobody knows you have it. It's a private transaction. There's nothing digital. There's no other counterparty that there's any risk. Once you have it, I mean, somebody could steal it from you, but it's yours. So gold is unique in that way. You can't just print a bunch of it. No one's figured out how to just make more of it. You have to expend a lot of energy, move tons of earth to get it. That's why it's served so well as money, because it can't be debased. Whereas a printing press, governments throughout history have always abused that privilege of having the printing press and debased every currency. Every fiat currency, in fact, Voltaire, the original Voltaire, said this, every fiat currency eventually returns to its intrinsic value, zero. So it's worth the paper, that's it, they abuse it. What's the difference between a $1 bill or a $100 bill? That someone's willing to give you goods and services, but at a certain point, like in Zimbabwe, it's a $100 million bill will buy you a cup of coffee. So it's just, they abuse it, they print it and print it until it has no value. Gold and silver, you can't do that. In this environment, I still think, even though it's certainly, at record highs, not silver, silver's more volatile, you're buying in the 80s now. I don't think anything that has driven gold and silver to the current highs has changed. I don't think that we're going to decrease our social welfare programs. I don't think we're going to have less war. I don't think we're going to spend less money. I think they're going to continue to print. And for the next couple years, I think we'll see higher gold and silver prices. I think at probably $15,000 gold, I'd consider selling some of mine, but I think there's still quite a bit upside there.
So you think gold's gonna hit 15,000?
What's changed? Like, are we printing less money? Mm-hmm. Are we going into Cuba next? Is that going to cost money? We're blowing up drones that cost $10,000 with a missile that costs $100,000. I don't see that changing. I think we're going to continue to print and debase our currency. We're with $30 trillion in debt, or 30, I don't even know the number, I forget, but it's some ridiculous number. The only way out really is just to continue to base our currency and pay back our debt with worthless dollars. So if that's the path forward, gold and silver will go higher. It's going to be more paper chasing relatively same amount of gold and silver. So
cool. All right. We're going to do some Q&A, but before we do, I want to introduce our sponsor today, Rancho Ted. Round of applause, Rancho Ted. You want to come over here? You want to tell us a story? So Rancho Ted, what he does is hard money lending. He does private loans. So if you need money for construction, this is your guy. If you need money to buy a property, flip a property, this is your guy. He has the money. So welcome.
I'm the guy. All right. Really, it's loans that banks won't do. That's what I do. And people are in situations, and the only one that's going to help you is a private lender, which is kind of fun. So that's where we step in and kind of save the day. So this is a great example of
from your
saving
angle.
the day.
From here.
It was a deal in Blossom Valley. I lent a private money loan to this lady who was buying a horse property, and the house was kind of in bad shape. No bank was going to lend on it. It was a horse property. She didn't have money. Travel bike, you want it forever. Remember walking out one of the doors, there was no deck. I didn't walk out, obviously, but so no bank's going to lend on it. So anyways, a few years later, maybe 5 years, which was just last year, she called me up and she's like, Ted, I need your help. She said this lady who was going to buy the property was in escrow, and the bank came back right at the end and said, hey, we're not going to lend you the money for whatever reason it was. And she was going to use that money, the sale of her property, to buy a place in Colorado. Now, again, it was the horse properties. These properties aren't that easy to lend on. And so she said the lady had 20% down. I said, in the private money world, we really want to be at 30% down. And I said, that's not going to work. But in the back of my head, I was like, you know what? This is a good place for a seller carryback. And I knew she'd be up for that because she wanted to sell it. So there's an example of using a seller carryback. She carried back, I think, 15%. We ended up being at 65% loan to value. and the lady had 20% in the deal, so we knew she wasn't going to go anywhere. So it was a safe loan. But you know, she knew enough to call me because she knew the bank was going to make this work. So keep that in mind. Doing a seller carryback can save a lot of deals, especially on land loans. You know, most people don't want to lend on land, and seller carryback really make those deals work.
Is there anything tricky to making the seller carryback work? Like,
No.
Repeat the question, please.
Oh,
Closer to the mic.
The tricky about doing the seller carryback, not that I know of, the seller takes the risk, but I will say some investors of mine I talked to the other day, somebody did a seller carryback of 20% maybe, I don't know. But in the end, the buyer never brought in any money, 100% financing, and then all of a sudden the buyer walks, you know, owns the property and then walks away. They got no money in it. So you got to make sure when you do these things that the buyer puts 10%, 15% in, so they're just not going to walk away. And now these people are in foreclosure, and they're kind of screwed, I think. So keep that in mind. If you're going to do one, make sure that the person buying it has some skin in the game.
Another opportunity. So obviously I think gold and silver are a good investment, but I also buy real estate. I'm buying a property right now that has a weed tenant in it. They have a conditional use permit. They're licensed. They're paying above market rent for the property. I have enough money to pay for the property cash, but I don't want to tie my cash up. But it turns out I am going to, but no bank will lend on it. So if I wasn't in the position, someone like you would be able to help me. I'm guessing you'd lend on a property that's completely legal, but because it's federal, no bank, and even now they've changed the laws, but still these banks are very slow to act. They don't want to take risk. And yeah, so, and you know, a situation like that, something I, you know.
Yeah.
Cool.
All right. Good.
Thank you.
Yeah.
All right, what questions you guys have about precious metals? By the way, you just spoke, there's a question I have. You just spoke about silver and gold. What about other platinum or anything?
Yeah.
Anything pop?
Yeah, so typically, I think platinum's undervalued. One of our brokers has been selling out of a lot of gold and buying his customers platinum. Throughout history, platinum's usually been more expensive than gold. Right now, that's reversed. Palladium also, you know, a lot of industrial use there. So platinum's only at 2,100, where gold's at 51 and change. So I think that that's undervalued. Silver, I think, is the best. I mean, highest risk, but potentially highest return. If you're buying at $85 silver, it sounds crazy because I'm so used to I started buying it at $4.60. But it was just at 117, and I don't think that anything fundamentally has changed. And in fact, there's a lot of people calling for $200, $300 silver. If you adjust for inflation, in 1980, silver hit $50, and if you use the government's numbers on inflation, I think it puts silver close to $200 if you use a government inflation calculator. So I think that there's upside. I think the greatest upside is in silver. It's in everything, your cell phones, TVs, window coatings, biomedical uses, and it gets consumed and it doesn't get reclaimed. Whereas, you know, if someone has jewelry, which is really the biggest use still for gold, central banks buy it as money on their balance sheet, and Indian women own gold, like more than anyone, and it's jewelry. So that's still the primary use, but it doesn't rot, doesn't decay, you know, and can be turned into coins, used in electronics, used, you know, in dental. There's actual use, and there's uses that we probably haven't thought of yet as technology advances for gold, and it works better, you know, because of its unique properties than anything else. Silver tarnishes, you know, you leave silver, you got to polish silver, it'll turn black. Gold, you could have a gold coin, and this, we kind of get some cool stuff that comes in, shipwreck coins, could be on the bottom of the ocean for 1,000 years, and it will look exactly like the day that it was dropped in the ocean. Yeah.
I remember you were here last year. Where was gold at when we were here last year?
Can you repeat the question?
Yeah, he remembers I was here last year. Gold was probably a little over 2,000. Now it's at over 5,000. And people did come in. You know, I know for sure some people came in. You look familiar.
I did. I went in last year and took your advice.
And what was the price?
I don't remember, but I had 20 sitting around in a savings account. So
Yeah.
I was able to buy 200 ounces of silver.
Yeah.
4 ounces of gold, so pretty much just under 20.
I mean, you've at least doubled your money. Yeah.
I'm content. I mean, I could have bought more, but I didn't have the money at the time. But
Yeah.
that's what I could just
Yeah.
away and I feel it. So yeah.
Can you repeat what he said? That way everyone hears it.
Yeah, I mean, he was here last year. He came in, he bought, X amount of ounces of gold and silver, and yeah, it's worked out really well for him. I think that'll continue to work well for you. Gold gets to 10, 15,000, maybe think about selling some of that. Maybe silver gets up to 200, sell half of that. And you're, yeah. So, that, Joe.
What about certain? What about certain older coins? How's the value, or how do you?
So,
repeat the
collectible
question?
coins or
Yeah.
older, yeah, he asked about what about the value of older coins. And I'd stay away from that unless you really have a passion for it. Like, this coin's over 100 years old, but it's not rare. This used to be money. People had these in their pockets. Like, there's a ton of it out there. Now, there might be a certain year and a certain condition that this same coin that's 5,000 could be worth 250,000. Unlikely you're going to stumble across that, and if somebody has that, if some coin dealer has it, unfortunately there are a lot of bad actors in this business, and a lot of the companies that you hear on TV advertising are selling people old coins that they're telling them they're rare, and they're selling them at huge markups. The stuff that we're selling is just basically based on the value of the metal, and our buy and our sell prices are right on our website. Any company that doesn't publish their pricing, it should be really transparent. It's a global market. We're not really, I'm certainly not an expert in collectible coins. What I do, if something comes in and I don't know what it is or haven't seen it, I'll look on eBay and see what stuff's selling for on completed listings, and then, well, that's what it's worth minus the eBay fees. That's what we'll pay you for it. And with older coins, really a lot of it comes down to condition, but I'd stay away from that. I just buy as close to the market price that you see on TV on the ticker symbol. I'd buy as close to that as you can, whatever's the best deal. Right now, I'd showed you a 1964 quarter. These are like 30 bucks. We have so much of this stuff, and like any market, based on supply and demand, real estate and, on the water is really expensive. There's only so much of it. Well, same with different products. I would just look for the best value. Right now, I know we have a ton of 90% silver, which is 1964 and earlier. I could sell that stuff for below the market. Why? At a certain point, I have to turn my money over. And if I'm sitting on millions of dollars at 90%, if I have to sell it wholesale to a dealer, well, I'm gonna probably get like $2 back right now. If you come into my store, I'd say, I'd buy this right now, I'd give it to you $2 under. Now I don't have to ship it, and I'll give it to you for wholesale bid. So, and we have 5 stores. We've done over $5 billion now in transactions. So we've done over $1 billion this year. It's crazy.
Wow.
So, and a lot of that, with my background in trading commodities, a lot of what we're doing is trading physical bars, 1,000-ounce bars. We never touch it, see it. It's at vaults, but we're just buying and selling based on price volatility. And then, but cool stuff comes in every day. San Diego, we have 3 stores, Kearny Mesa, Del Mar, and Carlsbad. So depending on where you are, most people, because we're here, are probably closest to Convoy Street. I'd say just come in, check out some of the different stuff. And if you have some money, I'd start buying silver, even at $80, you have $100, you come and buy a coin, just kind of start stacking it. And I think in a couple of years, you'll be glad you did.
Can I get that real quick? The way I started buying gold and silver with him was just, I would just get my monthly rents, whatever came in cash. And I would just go in there and I would just trade it for gold coins, silver coins. And then the cool thing that he mentioned about that 1964 coin, we get thousands of quarters.
Laundry machines.
My mom, my property manager, she's right here. If you guys need a property manager, you can reach out to my mom. She comes with like, yeah, go ahead, stand up. They want you need a property. This is my mom. Round of applause. So she comes in with thousands of coins. And it's, for me, it's fun. For us, it's fun because we just like lay them on the table and we're looking for the silver coins. And you could hear it. It sounds different. So we're like, I hear silver. And then we look for it. And then those are $30
Yeah.
instead of a quarter.
Yeah, that's right.
That's
So
a come up.
they're $15 on a quarter, $30 for a half. So an easy way to, an easy way to tell if it's silver or not, well, you could look at the year, but you could grab a stack of coins and then squeeze them together like in a, like you'd have a coin roll, and you look at the edge. The edge of this, there's no copper. That's all silver. Even though there's a little bit of copper in there, the color is silver. If you look at any modern coin, they're all, bronze, copper color, kind of red on the edges, and there's no silver in them.
Yeah. So if you guys look at the quarters, I find that, we find one in every 1,000?
No, like in every 500.
500 coins?
That's
Yeah.
crazy. Yeah, I'm surprised that you find them still. Yeah, I would have thought they'd all been kind of cycled out. And I'm surprised you guys still take quarters. We have all credit cards. I don't. Yeah.
That's the new thing that's happening, but we still get a ton of quarters. But go ahead, you can take the next question. Next
Sorry.
question, yeah.
This guy.
What's your opinion on like gold mining stocks and gold ETFs?
Great question. I would tell you
repeat the question.
what's my opinion on gold mining and gold ETFs. I think huge value there. I would be buying junior miners, SILJ. Like most of my IRA account is in mining stocks, and like I wouldn't tell people to be all in like I am. I mean, so you want to be diversified. I have real estate, I have income properties, I've got a stock portfolio, but like I'm way heavily, like I'm all in, but that's my business. I wouldn't recommend somebody be allocated the way that I am. But I heard an argument the other day. Someone was, and I'm not saying that this is right, it just, it worked for me and it's worked for some other people. Like, you're primarily probably real estate and you've done very well. The most successful guy I know, you might know Property West Residential. I don't know if you know, the guy's name's Mark Goslin. Just guy I met like casually, I didn't know who he was. Turns out he's in real estate. I was like, I should introduce you to my friends. This guy started with one duplex in Hillcrest. He was in a band. He's worth $8 billion with a B now. Yeah, and he just kept rolling it in real estate, borrowing against it, flipping them, and it's just crazy. And the most successful people I know, because I get to see what people do, and either they own their own business, and which you're kind of all in on your business, or real estate. Those are the two biggest things. So like a guy that owns Sprinkler Head Manufacturing Company, because man, those just keep breaking, and he didn't invent anything new, he just manufactures them. But more times than not, real estate. And I heard somebody talking about, you don't want to be diversified, you want to bet and go all in. Might not be the best example, but you're primarily all in on real estate, work well. I have somewhat diversification, but really I'm kind of all in on metals. Probably not great advice, but unless it is real estate, seeing our largest clients, and obviously the diversified because they're buying from us. You're buying from us, but you're kind of really all in on real estate. Like what you have in gold, I'm thinking is a small percentage. And typically I would tell people you want to have 5 or 10%. In this environment, maybe 10 or 20% in metals as almost insurance, because gold and silver don't pay you dividend, you don't collect rent from them. Whereas back to your question, do I think you should be buying stocks? Yeah, there are great mining companies and they're still valued on way lower gold prices as earnings come out, and silver prices especially. So that's why I mentioned SILJ. It's a fund with junior miners. Rather than try and pick an individual company, because now you're betting on the management of that company, the liabilities of those companies. I think oil prices are going way higher. Well, that's going to cut into their profits, because what's their major expense? You have to expend a lot of energy to move tons of earth to get a little bit of gold or silver. So that's going to cut into earnings. But with prices of metals where they are, still huge upside. And I think as earnings start coming out for these companies, I don't think most people have caught on to that yet. And I think that some of those companies are going to outperform the underlying asset. And I think, yeah, absolutely, I'd be looking at that. Another one is EPGIX. It's a Euro-Pacific no-load fund. I think that's a good one. And you're going to get exposure to stuff you probably wouldn't find on your own. And I wouldn't want to give individual stock picks while I own them. I wouldn't bet on just one stock unless you really kind of dig into these companies and educate yourself on them. I think you're better just kind of shotgun approach, bet on a sector, and I'd put some money for sure in junior miners. And then I think it's nice to have something tangible that you could hold, but yeah.
What was the last one you said?
EPGIX, it's Euro-Pacific Gold Fund.
Cool. What are the questions, guys?
Yeah.
You talked about storage earlier for your business.
Yeah.
What does that cost look like?
So it's about 0.5% a year. It's actually, in hindsight, it's a terrible business for us, but enough people were asking. But what I didn't account for, like most things, volume dictates price. Like even on our website, if you buy 1 to 20, it's this price. If you buy 20, there's tiered pricing, and the more you buy, the better price. It does not work that way with vaults. The more you insure, your cost per million goes up. And like I didn't know, just like this business, I figured it out. And enough people were asking us like, well, I'm not really comfortable, having this in my house. And if it's in a safety deposit box, it's actually not insured. They don't know what you put in your safety deposit box. So people were asking, well, could you store it here for me? And then when I want to sell it, you could buy it back. I'm like, you don't want your, like, I don't even want my stuff there. It says gold on the front of the store. We've had people drive trucks through the front of our stores. Like, it's crazy. So, so kind of out of, I don't know, not necessity, but for years and years, I was giving that business away to Brinks and all these other companies. And then people don't like, for us to deal with Brinks, they're a terrible company to deal with. I mean, I think your stuff's very safe there, but they're like, to get someone on the phone, it's impossible. To get an email return, they're terrible. Their interface, like to see what you have there, they're antiquated. Like they'll send you an email with like a list of what you have. You can't log in and see a port, so it's crazy. So we built a vault in Poway. It's not open to the public. You can come in, like it says FNDSC. We have a nice office. We'll bring your stuff out to you. We don't bring people into the vault. It's insured. It takes 2 people to open the vault. It's not a particularly profitable business for us, but where I find value is we're providing that service for our customer. And to be competitive, I guess, is where I can't compete with Brinks on price, but I can do better on service. And we built a platform where you could log in, you could see exactly what you have. A lot of what we do there is like 1,000-ounce bars where they're too cumbersome to kind of take with you, but it's the lowest premium. It's the lowest premium. And so we'll upload your bar list and your non-negotiable warehouse receipt, the insurance, everything's there. And then you pay storage quarterly based on the value. So if it goes up, your storage fee is going to go up that month. If the price of the metal goes down, because you're paying really for the insurance more than the storage, that's the greatest cost. But the value for us is when you want to sell, most likely you're going to sell to us because you're going to call, you're going to on a recorded line, Mr. So-and-so, today's date, here's the price, you're looking to sell, then you fill something out. So it's like complete transparency in what your pricing is, and then you fill something out to transfer the material to us, then it gets taken out of your account, we buy it from you, we wire you the money. Rather than you putting it in the trunk of your car, driving it to us, getting a check, which is fine too. So for that way, whereas if we sell stuff and people, Voltaire goes home and then, he goes somewhere else to sell it. Just, I doubt you would. I mean, that hurt my feelings. But
I wouldn't.
But it kind of sounds like a bad word, but like we kind of have a captive audience then. So we want to keep the customer in house, and then they'll sell. But plenty of people, as they've been getting their storage bill lately, and they were used to paying storage at $2,000 gold or $28 silver. A lot of people are opting to. They're like, you know what? I'll take it home. So we're shipping it, or they're selling it when they get their bill because they want to cash out. They're like, oh, I can't believe it's worth that much. So that's happening. But yes, so we do have a vault in Poway. Most of what we store is not even at our own facility because it's so expensive. So we'll store a lot of it at exchange-approved depositories. So when we want to sell it, we just sell it right onto the exchange. Very liquid for us. So most of the stuff that we're storing, I think over $200 million worth of stuff right now in Massachusetts at an exchange-approved depository. Yeah.
You mentioned you're looking at quarters to look at a specific date to see if it's silver.
Yeah.
What year would we be looking at?
So quarters, dimes, and half dollars, 1964 and earlier, they're 90% silver. 65 through 69, only the half dollars, they went down to 40% silver, not 90. So 65 to 69 on half dollars, 64 and earlier, dimes, quarters, halves.
When you melt the gold,
Yeah.
like the gold bars, they're 24 karat.
Yeah.
And can you mix the like 18 karat and 24 together in a bar? Are you able to tell the difference?
Yeah, so we don't, if 24 karat bars come in, we don't melt that stuff. We resell it as long as it's like nice resellable product. And you said, can we make it into 18 or 20? Jewelers do that. They'll buy pure and then they'll add other metal to it to bring the purity down so they can make jewelry out of it. It makes jewelry more expensive. Although jewelry is not the way to invest. Markups on jewelry are really, really high. I don't recommend buying jewelry as an investment. You bought 24 karat stuff, so that's interesting. Hopefully you didn't pay a big premium. I don't know where you bought it.
It was like 6% premium.
That's fine. Yeah, that's fair. I think you bought it in like
Hong Kong.
Yeah, exactly. So, but if you go to a jewelry store, you're paying like 200-300% markup most likely. You bring it into one of our stores, we're gonna melt it. Like even though it might be beautiful, we melt bags of really nice stuff. Unless it's Cartier, unless it's a Rolex, unless it's something where there's that premium we could get out of it. In which case, a lot of the time, we're not the right place to sell it to. And if you have like big diamonds in a piece of gold, we'll send you someplace else, just because that's a whole nother thing. But if it's 18, 24, 22, all that stuff gets refined. We just have to wait till we get enough of it, and then we send it to a major refiner, and they turn it into pure gold.
But when you're buying, like, let's say a bar,
Yeah.
and it's 24 karat, can it have 18 karat?
No, so we test everything.
Together?
No, then it wouldn't be 24 karat. So basically, yeah, there is counterfeit stuff. They don't generally counterfeit it with a lesser gold. They'll put tungsten inside of it, and tungsten is like very close, very similar to the atomic weight of gold. It's very heavy. So they can make really good fakes now where they'll put gold, really heavy gold plate on the outside, but it's really a tungsten bar. We have XRF X-ray guns. It's a pretty expensive piece of equipment, but that can be fooled if it's heavy enough plating, because that X-ray wouldn't be safe to use if it was going all the way through. So it only goes so deep. So that can be fooled. But then we have another piece of equipment called the Sigma Metalytics machine that will test all the way through. So you have to put in, it doesn't know what you're testing until you tell it, but then it will tell you if it's pure all the way through. And then between that and the XRF X-ray gun, we can say, yeah, this is 100% gold. And then we put it on the other machine and we know it's 100% gold all the way through. So anything you buy from us, anything that comes into our stores, we test. Anything that you buy from us, we're testing in front of you, and before you leave with it. Yeah.
If we're not buying, gold from you, and we go, out of the country to buy gold, how do we tell that the business is legit?
Yeah, I don't know.
Repeat the question.
If you're buying gold out of the country, how can you tell that it's legit? Yeah, I don't know how you do that. He got lucky, I think any place you can kind of get a feel, like if someone's opening up their vest and they're like, hey, I got these gold chains, probably don't buy from that guy. But if it's in a nice building and there's a security guard and it looks like they've been there for a while, yeah, you're probably okay.
Yeah, and can I speak on that? So when I found him, it was just, I just did a lot of research and checked out all the reviews, and that's how I found him. But there's a lot of options, but that's important because you want to deal with a reputable source. And then the other thing about going out of the country, so the cool thing about that 1 ounce of gold that he has in his pocket, that's $5,000. So if you travel somewhere, Europe or wherever, do you want to take 15,000 cash or just 3 of those coins? And then once you arrive, you just trade one of the coins for euros, or whatever.
I'll do one better. We sell a 1 ounce pure gold bracelet. It's just a bangle, and it's 24 karat gold. It's exactly 1 ounce. You could put 10 of those on your wrist. Nobody would even think anything. I guess technically you're supposed to probably declare it, but coins more obvious. I travel with coins a lot just because of my business, and every time I get taken to, if I have if I have a bar like that in my bag, they can't see through it. They're pulling me aside. They want to see what I have. Jewelry, not so much. So I wouldn't buy jewelry again as an investment, but we do sell 24 karat, and it's not a big part of our business, but we do sell them, and it's discreet. It just looks like a bangle bracelet. No one will even know if it's real, but it's stamped as pure gold. We'll show you, we'll test it, we'll weigh it. And how there was companies selling those, and they were charging a big premium, and I was like, well, I wonder what it would cost for me to make these. And when we get in scratched up maple leaves from the Royal Canadian Mint, 24 karat gold is very soft, so it gets scratched up easily. So when we get in these scruffy coins that we used to melt, I was like, well, we could just turn these into bracelets. What would it cost? And it doesn't cost us much, so we make more. And it's such a small margin business, because you could look on your phone and be like, well, this place has the same maple leaf. Why am I going to buy it from you? It's just price, or the relationship. You want a place you can go to sell it back to, all that, which we'll buy whether you bought it from us or not. But